As of 2023, China's foreign currency reserves stand at about 3,200 billion US dollars. However, the information regarding the exact composition of the reserve is highly classified. In other words, even if we know the strength of the reserve, which is the largest in the world, we don't know how much of them are USD, yuan, and gold. Compared to this, the US foreign exchange reserve is only 36.5 billion US dollars. Yes, China has 3,200 billion US dollars and the US has only 36.5 billion US dollars. Now, experts believe that most of China's foreign exchange reserves contain USD, so China could one day collapse the US economy by dumping all USD it holds. It appears as if the time has come as now, China just dumped massive dollar holdings. How much were they, and what does it really mean for the US? Welcome back to another exciting episode of our channel. Innovation Diary brings you China's innovation stories, projects, and growing influence in different parts of the world. If you are new to the channel and enjoy learning about fast-paced modernity, especially China's development and growing power, you will definitely find our videos intriguing. In this video, we will explain how China dumped its massive dollar reserves in ways the US never expected. Let's get started. During the time of Greek city-states, philosophers and historians already predicted that various countries would rise to power at various times. In other words, there would be no permanent superpower if we redefine what they said in today's language. One of the relevant terms which fits in the current scenario is Thucydides' trap, a phenomenon when a current power feels threatened by a rising power. As a result, there are violent clashes between the two, which inevitably results in the loss of glory of the power which ruled for a long time. Now, when the world has become more sophisticated, we don't see people fighting using arrows and cannons. However, clashes go on subtly. We are seeing this between China and the US, where the latter is paranoid of the former. The US feels threatened and wants China to fail. It just wants China to be out of the equation and give the US some more years to rule. But the US loss of glory is inevitable as the tectonic plates have started to move. It turns out that this is happening in a battle of currencies. That country whose currency will get international status will be the one running the world. And now, the yuan, China's currency, is undeniably on the rise. Quarter by quarter, its prominence in global currency swaps is steadily escalating, garnering attention from nations seeking to diversify their financial strategies. This trend is notably challenging the supremacy of the US dollar as the world's reserve currency. On the other hand, China's monetary authorities are resolutely taking proactive measures to stabilize the yuan, signifying a pronounced shift in their policy priorities. And the outcome of these efforts is eagerly anticipated. It appears that China has already started the de-dollarization battle and is crowning its own currency. The global phenomenon of distancing from the US dollar in favor of the Chinese yuan has gained substantial momentum, marking a significant shift in international financial dynamics. In response, Chinese policymakers are orchestrating an array of measures to bolster their currency. Bloomberg has already reported that China is using some of the latest tools to stabilize the yuan so it can be ideal to replace the USD. These measures extend beyond rhetoric, as China's prominent government-controlled banks are actively dumping their US dollar holdings while simultaneously acquiring yuan in both local and international markets. The biggest of the moves was pulled by China's central bank, when it approved state banks, including those in Hong Kong, London, and New York, to initiate dollar-to-yuan swaps as a strategic move to prevent yuan depreciation. Yet that's not it. China is making the yuan stronger against the USD. China's leadership is vocal in their commitment to revitalizing the nation's economy and enhancing its resilience. Central to this effort is the stimulation of domestic demand to fortify the economy. With this, the focus remains on preserving a balanced and equitable exchange rate for the yuan to instill investor confidence. The introduction of relaxed borrowing rules for companies seeking overseas funds augments the nation's economic strategy. Notably, the People's Bank of China has undertaken the role of setting a daily stronger reference rate for the yuan, underlining their determination to curtail any further devaluation. Yet another strategy is the FX stability of the yuan. Before we continue further, tell us, are you enjoying the video? If yes, please like and share the video and subscribe to our channel for more videos about China's development, power, and influence on the world. Let's continue now. China's central bank has been focusing particularly on FX stability, which means safeguarding the yuan from any depreciation, illustrating a renewed mission within China's financial landscape. This focus aligns with the broader efforts to ensure the currency's strength and international credibility. China knows that if the yuan is to become an international currency, it has to be stable and there must be only minor fluctuation in its value. It's because all other currencies will be having yuan at their back, and a fluctuating or depreciating yuan will create problems. China's financial authorities have been decisive in their dedication to reinforcing the yuan's position. Their initiatives are multifaceted and dynamic. Notably, they have recently relaxed regulations, allowing companies to secure increased foreign borrowing. Additionally, the People's Bank of China has consistently set a stronger daily rate for the yuan, maintaining its value. Even in offshore markets, the yuan mirrors its onshore counterpart, reflecting the synchronicity of China's foreign exchange policies. The offshore yuan achieved a weekly high of 7.1475 before stabilizing at 7.1542. This alignment between the onshore and offshore yuan underscores China's concerted efforts to maintain a harmonious currency narrative, both within its borders and on the global stage. After doing all this, China is now dumping the USD while stockpiling the yuan. That's called de-dollarization and internationalization of the yuan. In other words, China is not only removing USD, but it's also putting the yuan in its place. As the fundamental currency of China, the yuan has recently undergone a significant surge of over 0.6% against its US dollar counterpart. This surge brought the mainland yuan to a peak of 7.1411 against the dollar. In subsequent trading sessions, it sustained this momentum at 7.1541. On a global scale, nations are demonstrating heightened interest in embracing the yuan as an alternative to their heavy reliance on the US dollar. This trend finds its roots in a crucial turning point, where the US weaponized the USD against Russia, raising questions about its reliability. This sparked a re-evaluation among other countries about their over-dependency on the dollar. At that point, when countries were thinking of dumping the USD, China made that easy, instead of allowing them to fear. This was done by offering yuan in global currency swaps. Financial institutions are actively engaging in currency swaps, leveraging their financial acumen in settling transactions. This has given rise to a growing adoption of yuan-based transactions among countries, propelling this trend with remarkable momentum. But how is this done, and what does yuan swap mean? Well, China ensured that the yuan is accepted at all places where USD is being used. This was done by making trade in yuan a possibility when Saudi Arabia accepted yuan for oil sales. Not only that, but even the IMF started accepting yuan for debt payments. Various countries are holding yuan in their foreign exchange reserves. Here we should ask, what difference has been left between the yuan and the USD? Yuan is being used at every place where an international currency is used, allowing countries to accept the change without thinking twice. In the first quarter of this year, the cumulative value of these swaps surged to an impressive 109 billion yuan. This marked a substantial 20 billion yuan increase from the preceding quarter, equivalent to a staggering 15.6 billion in US dollars. Notably, several nations are utilizing these swaps as a mechanism to infuse capital into their national banks, exemplified by Argentina's strategic move in April to address a significant sell-off of its currency, the Argentine peso. From now on, Argentinians can use literally yuan for their checking and savings accounts, something that even USD could not achieve. In conclusion, China is on its way to slowly dumping the USD and reinstating the yuan in its place. This has to be done precisely at a slow pace, so the US does not have to face an economic crisis. If China dumps the USD instantly, which it can, it will crash the USD market, making it worthless. There will be hyperinflation in the US, markets will fall, and it will be not only over for the US economy, but the US as a country. But China doesn't want to do this. It does not want a crippled America because it has never been its policy. For those saying China is yet to become a power, they must know that it's because of China's courtesy that the US is surviving and its markets are stable. Otherwise, dumping over $200 billion US dollars will create a catastrophe for the US. We would like to take a moment to appreciate you all for commenting and sharing your opinions. Your insights always impress us. Now tell us, isn't it true that China has become more active to launch a new international currency? Do you think the end of the U.S.